And hello, everyone. Welcome to our Tech Talk, Deciphering the Market Story. My name is Daniel. I'm greeting you today from our beautiful office here in Montreal, in Canada. And it is August 28, 6 p.m. Eastern Time. And I'm super excited for this Tech Talk because for the very first time, I believe we have come up with a comprehensive approach so that everyone using the right tools can decipher and understand what the current market story is and why this is important and how this can help you in your trading. We're going to discover together in this webinar. But before we get into all of this, let me ask you, where are you guys calling in from? Who do we have in the room today? Please put your location into the Q&A box. All right, Senna from Cascais, from Portugal, I was told. Senna, nice to see you again. Who else do we have in the room? So we have Senna from Portugal. We have Stefan from Hamburg in Germany. Hey, Stefan, nice to see you again. We have Gerald from Santa Fe in New Mexico. Justin from Australia. Hey, Justin, how's it going? Wow, far away. We have somebody from Saskatoon. Hey there, is this Rolf? Potentially, I believe it's perhaps Rolf from Saskatoon. A repeat. Yeah, viewer Tom from Roseville, California. Hey, Tom, how's it going? Lenny from New York City. Hey, Lenny, how are you? Who else do we have in the room today? Please put your location into the Q&A box. So we have Germany, we have Portugal, Australia, the US, we have Canada. And then we have Marcus from the Black Forest in Germany also. Hey, Marcus, wie geht's? How are you? Paula from New York, New Jersey. All right. Hey, Paula, how are you? Perfect. Well, thank you so much, guys, for sharing your location. We do have a full room today. So thank you so much for joining us from literally all over the world. Okay, so let's get into it. And of course, once again, thank you guys for joining us, as I mentioned before. And we are, you can't even imagine, super excited to have you here because what we are going to show you today is a comprehensive, systematic, and almost mechanical approach for understanding the current market story. And by doing so, predicting what the next chapter might be all about. And as you perhaps know, trading to some degree is about predicting what may happen in the future. All right, but before we get into all of this, let me quickly introduce ourselves properly. So we are tradingindicators.com. My name is Daniel. I'm the guy here on the left-hand side, and together with Homa here in the middle, we have created Trading Indicators about 10 years ago with one mission of creating the most innovative trading indicators. And over the course of the 10 years, we have built trading indicators for all major platforms for clients all over the world, and we counted them up at some point, and we've built over 1,000 trading indicators. So we've seen it all. What we're going to show you today are the 6 indicators that we use in our trading to decipher the market story, and how we combine these indicators and how we put them to use will be the topic of today. And I should also mention that Niklas is also in the room today here on the right-hand side. Niklas has been instrumental in building these 6 indicators, which help us in our trading every single day. And indeed, we're going to look at some trades we took earlier today, which worked out beautifully, simply by understanding what the current market story was all about and where it may lead us for the next chapter of the market. So having said all this, a few words about what we do and how we do it. So most of what we do in terms of trading is based on what's called technical analysis, which is basically a mathematical pattern analysis of your price chart. We believe that technical analysis is so much simpler than fundamental analysis. And in fact, in our view, trading should be simple. In fact, trading can be simple, but you need to use the right process and you need to use the right tools. And how this works and how we use it in our own trading, we're going to share with you today. Also, please, everyone, make this webinar your own. If you have any questions, don't be shy. Please put your questions into the Q&A box, and we're going to get to those as we proceed through this presentation. I also need to quickly remind you that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, difficult word, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies and setups discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so with this out of the way, let's get started. So this presentation, this tech talk is about one primary topic. It's about reading the market. It's about understanding what is going on right now in the market. It is about understanding how did we get here? How did price get where it is right now? What was the path that price took? So why is this important? Well, you may guess it, understanding of how we got here, how price got here, will allow us to make an educated decision as to whether or where price will be going next. It's about predicting the next chapter of the market. Now, you may say, okay, well, this sounds all very tedious and time consuming. Why should I do this? Why shouldn't I just enter when an indicator just gives me a signal? Great question. And in fact, when I started off trading, I can't speak for everyone on our team, but when I started off trading, back in the day, more than 20 years ago, when I was at university, I followed exactly this approach. I was blindly following trading indicators and trading signals, which gave me a buy or sell signal on the chart. And once I saw it, I executed the trade exactly as the indicator had shown me. With some success, of course, but also with a lot of potential where I could have made a better trading decision, which I didn't because I blindly followed that trade signal. Now, we then realized throughout the years, through experience and through learning, that there is actually a better approach. Rather than blindly following a trade signal to go long or short in the market, it is important to first understand and to further qualify what this signal is all about and whether this signal still makes sense in the current market context. And this is where we came up with our three-step process, which is as follows. So step number one is to understand what is the current market story, see what the market is doing, see what has brought price to where it is right now. And we can do this by looking at what trend is doing, looking at what volume is doing, what are the current market conditions, and so forth. Once we know what the current market story is, we can then anticipate the next move of the market, where it is likely to go next, and when will it get there. Two key ingredients for any trader. It's not just about directionality, it's also about timing. Timing is so important. You want to estimate when price is likely to get to the next step, to the next station. And only then, once you figure this out, once you know what the market story is, once you can anticipate, or we can anticipate as traders, where it may go next, then we can look at trade signal. Then we should look at trade signal, which can confirm that move which we are anticipating. This should be the proper process. And in this webinar, we will focus on these first two steps, which have turned our trading around. And hopefully, by reviewing what these two steps are all about, they will also help you out there to make better trading decisions. All right. And of course, Derek, thank you so much for asking this question. Yes, this session is being recorded and it will be posted on our YouTube page shortly afterwards. So if you go to our homepage, tradingindicators.com, there's a YouTube icon in the top right corner. Click there. It will bring you to our YouTube page and you can find the recording shortly afterwards. All right. Now, let's move on. So as a reminder, this is about seeing what the current market story is. And in our view, and the way we do it, this is all about deciphering what is the current market sentiment, for example, trend, momentum, and so forth, and then adding market IQ. Sounds a bit mysterious to the whole thing. Now, how does this work? Let's start with market sentiment first. The first step. Now, market sentiment is all about understanding how did we get where we are right now. You can see here for this particular symbol, the Dow E-mini futures. And by the way, what I will be discussing in this webinar not only applies for futures trading, for day-to-day trading, but also to longer-term trading, stock trading, and so forth. There are no restrictions. Okay, so let's say price is at 45,000, around this price level. Okay, that's one fact that we know, but how did we get there? Well, let's have a look. We can, for example, see that price was in a downtrend previously and has then swung around into a bullish move, into an uptrend, as indicated by this indicator here. We're going to get to this a bit later. Okay, we can also see that right now, the uptrend has continued after this little pullback. Here you can see there was a little pullback within an uptrend, and now it has continued its bullish move. Okay, this is great. We understand a little bit how we got there. We were first trending downwards, then turned around with a bit of a retracement, and now we are at this price level. Great. That's step number one. That's the current market sentiment. And there's much more you can add to this. You can look at trend as we've done. We can look at trend strength. How fast did we go up there? How long has the current trend been going on? This we call this the pulse of the market. How fast are we moving? How long has the move been? And so forth. And of course, you can also look at other symbols. For example, if you are trading a symbol which is heavily correlated to the overall index, let's say the SPY, maybe NVIDIA, so other symbols, you can look at how does this symbol currently relate to an overall index? Is it a leader? Is it a laggard? And so forth. All these aspects will give you information or more insights as to what is the current market sentiment. All right, that's step number one. Step number two is, once we know what the market sentiment is about adding what we call market IQ. So market IQ oftentimes is not as easy to spot because sometimes the levels to which market will react, they are a bit hidden. Yeah, and you have to look very closely to the price chart, perhaps at different time frames, at different symbols, to figure out what are these hidden levels in the market. Because they're a bit hidden and they require some more sophisticated indicators, we call this the market IQ. So how could this work? Well, this is the very same chart as we've seen before. We can see here on the E-mini Dow, it was first going downwards, then it swung around to an uptrend. And of course, we've seen this before, but now let's add some market IQ to it. Market IQ are these key levels on the chart to which price is likely to react. For example, this key support level down here, which acts as a natural support level under which you perhaps could potentially put your stop loss. And up here, we do have a resistance level where price may bounce off from to lower price levels, which could be a good position for your target. We can also look at volume. Which price area is the most heavily traded one? By looking at this volume profile indicator here on the right-hand side. Is there lots of volume traded right now? Is there perhaps very little volume traded? What is the overall bias? Is it rather bearish or bullish at certain price levels? And all this will help you to add extra information into deciphering what the current market story is. And by the way, don't worry, this may sound very theoretical right now. It's going to get very practical very soon when we're going to look at some charts. All right, so market IQ is all about finding the levels to which price is likely to react, which can act as support and resistance, and which can act as lines in the sand to which price will react in a certain manner. It's also about looking at volume, using a volume profile indicator to understand, okay, is there any fuel left behind the price move? Are there actually, is this price level actually being traded? Might this price level act as an acceleration zone or perhaps as a deceleration zone? Who is in control? Are there more buyers at a certain price level or more sellers? And so forth. All these things are important to understand what is going on right now in the market. All right. Now, again, we will get practical very soon. So why does this all matter? Why should we make all this effort in understanding what the current market story is? Well, once again, we believe seeing or reading the market is so crucial in forecasting or for forecasting what the next move might be all about. And trading, once again, as mentioned before, is about forecasting where price may go next. It's about forecasting the future. It would also allow us to trade with more clarity, because once we put in the effort and the time to understand what the story of the market is, we can come up with a trade plan. We can actually plan out our trades instead of doing it in an ad hoc manner. It will prevent us from doing or, trading emotionally, which oftentimes is not the best idea. And I'm a victim myself to have done this many, many times. I personally have a personality where I need emotional control. And by going through the steps, to understand first the market story, I indirectly enforce on myself what I would call emotional control. It will prevent me from making what's called ad hoc trading decisions out of FOMO, the fear of missing out, or perhaps out of revenge and so forth. We don't want this. We want to trade with a plan. And of course, it will also help with risk management. Now, I mentioned before, deciphering the market story is important, but how do we do it from a practical point of view? How can this be done? Well, we are trading indicators, as our name suggests. We rely heavily on the use of what? Technical indicators, indicators on the price chart, which will do all the heavy lifting for us. And what we have done over the course of the last 2 to 3 years, we have built an arsenal of trading indicators which allow us to do exactly this, where each indicator will serve a very dedicated purpose with the objective of creating a comprehensive understanding of the current market story. All right, so for example, we have an indicator called MA-Rush for analyzing the trend radar for doing a multi-level trend analysis and for showing us the market conditions, TI matrix for doing a multi-time frame analysis, TI pairs for correlation analysis, liquidity IQ for seeing where are key support and resistance levels, and volume IQ to understand where are the most heavily traded price areas, is there a bias, where are the action zones, and so forth. So each indicator, you can see it here, serves a very dedicated purpose. What I want to do now, the next perhaps 10 minutes, give or take, I want to give you an overview of what each of these indicators brings to the table. And once we know this, we're going to go over to some very concrete setups and also to some live charts. Does that sound good? All right, let's get into it. We're going to start with an indicator called MA-Rush. That one here. So down here to understand the market sentiment. So what does MA-Rush do? Well, first off, MA-Rush is an indicator which is overlaid to the price chart, and at its very core, it prints these bearish or bullish labels on the price chart. It is an indicator which is by design very conservative, meaning it will not change its mind with every little pullback or retracement within a trend. It will keep you in that trend. It's designed to do that. And we call this the adaptive trend reader that sees the forest and not the trees, meaning it looks at the big picture. And it can do this by doing what's called a multi-time frame analysis and by doing what's called noise filtering, which prevents the indicator from alternating between bearish and bullish and bearish and bullish with every little zigzag in the market. And as the name suggests, it's a trend indicator. Now, how does it work? Well, you can see it here. It prints these labels onto the chart, and these are identified by doing a multi-time frame analysis. And noise filtering prevents, as mentioned before, the indicator from changing its mind all the time. It will keep you in the trend for as long as, in quotes, humanly possible. All right, so this is MA-Rush, trend. Secondly, next, we go to trend radar. That also sounds a bit like trend, but it's a different indicator. It specializes on identifying the current market conditions. It's not printed onto the price chart, but it's printed underneath the price chart in this heat wave, or heat map, actually not heat wave. Yeah, it's been hot. On this heat map like format underneath the price chart, from which you can read what is going on right now in the market. What are the current market conditions? For example, what you could see are healthy pullbacks within an uptrend. You can see prices been going up here. The last line of of trend radar is green, meaning the longer term trend is bullish. But within that longer term trend, there are some red patches here. These are pullbacks within a stable uptrend. As a trend trader, for example, this is where you want to get into it, because you want to enter on a pullback because you can get in cheaper and with less risk on the table. That's one thing the indicator shows you. A second thing, what you can see with this indicator are shifts of trend. For example, here trend is coming down. We are on a bearish trend. Everything is red here in this area. But then, because the stair-stepping phenomenon, little green areas are coming in, like a stair. Here and here and here and here. Eventually, we are all green. These are signs of exhaustions and indications or early indications that, hey, we may see a reversal of trend. This downtrend here may come to an end and reverse to the upside. And exactly this is happening right here. So trend radar for understanding what is going on in the market, what are the current market conditions, and what are some micro trends within perhaps a longer, stronger uptrend, identifying these pullbacks. All right, so that was trend radar. TI matrix, an indicator for the big picture. What do we mean by big picture? Well, let me throw out a keyword here. Time frame tunnel vision. What is that? Well, time frame tunnel vision occurs, you can see it here, if you perhaps trade from the 5-minute chart, you see a very interesting setup on this 5-minute chart, you act on it. But you did not consider what was going on the higher time frames. Perhaps this was a long setup that you saw. You execute a long trade, but on the longer time frames, on the bigger time frames, you were trading right into a resistance zone, which may lead price to bounce off this level to the downside. You could have found this problem, in quotes, if you had zoomed out, if you had consulted the bigger time frames. Well, TI matrix is an indicator which will show you at a glance in this table-like format here what is going on these other time frames in terms of trend, sentiment, are we overbought or oversold, where is the next support level, where is the next resistance level. And on top of all this, it will also give you a score between -100 for very bearish and +100 for very, very bullish, which basically sums up what the indicator found across all these different time frames. This is what TI matrix is designed to do. It does multi-time frame analysis, and as mentioned before, it will prevent you from having time frame tunnel vision. And once again, why do we do this? Because we want to take the trades where the odds are stacked in our favor, where everything lines up, where we have a clear understanding of what the current market story is, and a good understanding of what the next chapter might be all about. So all this needs to line up. All right. So, and there's one more indicator which will help us with this. It's TI pairs, an indicator to find correlations between symbols, something that we recently added to our repository of indicators, and it's been paying dividends for us at least already. By the way, today, and Niklas was going to show us this a little bit later on, we have found a trade, a long trade in the Dow futures today, where we identified, okay, the Dow futures, they are long-term correlated with the NASDAQ futures and also the S&P E-mini futures, but short-term, it fell out of sync, meaning there might be a need for the Dow futures to play catch-up. And by seeing that ES, the S&P 500 futures and the NASDAQ futures already pushed ahead early today, we thought, okay, maybe the Dow are going to play catch-up, and this could be an interesting moment to place a long trade, which has worked out beautifully. We're going to get to this trade a bit later on. So in summary, an indicator which will allow us to see correlations between symbols, finding leaders and laggards between correlated symbols, and first of all, preventing us from over trading, from taking too much risk. For example, taking the same setup across different symbols which are heavily correlated, which basically means we are doubling down on this trade idea just across different symbols. But since they are correlated, it's really basically taking the same trade twice, which oftentimes is against the concept and the principle of diversification. All right, so this was TI pairs, and we have two more indicators up here, which will help us to add market IQ to our understanding of market sentiment. The first one is liquidity IQ. All right, an indicator which specializes in identifying hidden support and resistance levels on the chart. It works automatically whenever you apply it on the price chart. And whenever you do, you will see these key levels. The green lines here are resistance levels, for example, and the red ones are support levels. You see these key levels on the chart. And as you may know, support and resistance. These are levels to which price may act in a very specific way. For example, when price came down here to the support level, what we saw here was a bounce off the support level towards higher price level. Then price came up to resistance. Once again, a bounce. Down to support, a bounce. Up to resistance, a small bounce. And then we had a break. And once a level is broken, for us as traders, there's another opportunity. You can see it here. Once a key level is broken, we often will see a big follow through in the direction of the breakout. But of course, this concept of support and resistance, it lives and dies by our ability to finding strong support and resistance levels. And this indicator is able to find these strong levels by doing, once again, a multi-time frame analysis. So finding these levels automatically for you once it's applied to the chart. So this is Liquidity IQ. We have one more indicator, and then this will complete our round trip, which is called Volume IQ. And as the name suggests, it's an indicator which analyzes volume on your price chart, but in a very specific way by using what's called a volume profile. A volume profile is printed to the right-hand side of price, not like the regular volume, which is below price, which basically just analyzes the bar volume of every candle. This is not what this indicator does. It analyzes how much volume is being traded at a certain price level, which is very important for identifying zones of control where price oftentimes slows down, like this big volume node here, and which can act oftentimes as additional support and resistance. And a great setup, for example, comes to fruition when a key level of Liquidity IQ and Volume IQ coincides. They're at the same price level. This reinforces this level even further. The volume profile indicator also gives us insights as to whether we have more sellers, these red areas here, or more buyers at a certain price level. Once again, helping us understand what is going on right now in the market. Where are the sellers positioned? Where are the buyers positioned? Is there a bias towards a certain sentiment and so forth? Yet another piece in understanding what is going on right now in the market story. And Olu, yes, these indicators will work for Forex. This volume IQ indicator will work for any pair which has volume. So please maybe check whether your Forex pair actually has volume, a volume read and volume information. If it does, these indicators will work. So volume IQ, once again, will help us to find these zones of controls, these high volume nodes, but also these low volume nodes where price oftentimes accelerates. It will show us whether there is a bias towards sellers or buyers like here. And it will also help us find what we call action zones, where price will react or to which price will react in this very specific way. All right, so this was our round trip. Thank you for being patient with me. This was our round trip through our 6 key indicators, which will help us to understand the market story. All right, so to summarize real quick, and then we're going to get practical. What we've seen so far is that each of these indicators fulfills a very specific role. You can see it here on this chart, sometimes even multiple roles. Like, for example, trend radar, an indicator which helps us to understand what is the current trend doing and what is the pulse of the market. Liquidity IQ is great for finding structure in the market, where are key support and resistance levels, but also it gives you a read on trend. Volume IQ, or volume profile indicator, allows us to see what is the current market participation, where are more buyers, where are sellers located, where is the most volume traded, but it also gives us a feel about the market pulse, the market conditions, and where are key levels, because oftentimes the zone of control acts as support and resistance, another dynamic level on price, and so forth. So this matrix, and I'm happy to you can study on your own with the recording, shows you what is each indicator bringing to the table. All right, now, next up is going to be Niklas, who will be showing us some very specific combinations of these indicators to find trade setups and to give us a very unique understanding of the current market story. But before we do, just in case you need to drop off early, I would like to point out and announce that we do have, in celebration of this Tech Talk, a special promotion going on right now, where you will get any of these 6 indicators: Liquidity IQ, Volume IQ, ME-Rush, Trend Radar, TI Matrix, or TI Pairs. You will get any of these 6 indicators at a 30% discount. And all you need to do is to go to tradingindicators.com/story. And of course, story for deciphering the market story. This is a limited time offer. It's also a lifetime offer. So once you own this indicator, you will own it for life. There's no other payments required. You will have it for life. All you need to do, and Nicholas, please put this link into the chat box, is to go to tradingindicators.com/story and then enter the discount code STORY. That's the discount code, which will give you the 30% off. So tradingindicators.com/story, discount code also STORY. And this is a limited offer and a lifetime offer. All right. Now, we're going to get this back later on, but now let's get concrete. Let's look at some very concrete setups that we can find, or very specific understandings about the market that we can find by mixing and matching these indicators together. So just the real power, comes in when you put them to action and see what kind of reads do we get from these different indicators. So Niklas, are you there, and are you able to give us a couple of interesting setups and maybe also show us what we traded early on today in the futures market?
Yeah, for sure. Yeah, I'm excited too. And we're going to get to the trade we took, definitely. And actually, I took another trade in that symbol that we'll see as well. But if you could walk forward with the slides, please, and we can get right into it. Okay, so the first one. So what we're trying to really show you guys here is, like Daniel showed in that table. Well, number one, you kind of want to get a feel for what the market sentiment is. It's kind of the first part of the story, right? Where have we been? Where are we going? Are we going up? Are we going down? Are we kind of ranging sideways? So you're always going to want to start with that, at least, and visually, that's what I always do. I think that's what most traders do. You want to know what's the market sentiment. The next thing you're going to want to do is get a little bit smarter about it and find, all right, well, maybe we're going up. That doesn't mean to buy now, right? You want to get a little bit smarter. It's why we call it market IQ. You want to find where you could be entering, what would be a good spot to enter. And what we want to show with these examples here to start off is all six of these indicators, no matter which ones you get, there's oftentimes going to be a good combination of maybe one, two, or two or three, or even more, that are going to give you a nice picture with which to find consistent, and that's what this is about, repeatable trade setups that you get familiar with, you get comfortable with. You've seen them a bunch of times, and these patterns will continue, and it's easy to make your risk and find your stop and your target and your entry. So the first one we're going to start off with is what we call momentum breakout. And it's kind of a new name. We call it breakouts or zone breaks before in our talks. But momentum breakout, basically this combination is with our two indicators, MA Rush and Liquidity IQ. Honestly, this is, besides the other setup we're going to see in a second, this is the most common one we ever trade, is MA Rush and Liquidity IQ. MA Rush, where Daniel's cursor is, that's an indicator that gives you a long-term read on momentum. So it's just giving you a feel for, based on multiple timeframes of data, and it's resilient. It doesn't get faked out so much like a lot of other tools. It tells you, well, are we bullish or are we bearish? So on this chart, we can see where Daniel's showing, this was actually on gold on the 1 hour chart. This is going back at the end of July. It was just a great example. So we saw that MA Rush, the market sentiment part of the story, told us, hey, we're bullish. That's our momentum. We know that. That's great. Doesn't mean that we need to be entering right now. Instead, now we're going to get a bit smarter in the market IQ component of the story. We're going to use Liquidity IQ to help us find breakouts. And Liquidity IQ is the indicator on the chart that shows that those resistance and support zones beneath, above price. And it also gives us signals amongst several others, like these ones, zone breaks. They tell us, hey, did price break out? This is actually a setup we call a zone break. And look, price breaks out through the resistance. We could have had confidence entering on that trade because we had a feeling that momentum was bullish. And actually, Daniel, if you can move your cursor over to where the zone break retrace happens, this is the setup we really like, because usually when resistance gets broken, price flies up, but people are going to take their profits. So you want to wait for the pullback. And oftentimes, where does it pull back to? To the level it broke through. That's why it's good to know where these levels are. Because look, we broke out, comes down, look what happened. It touched it, maybe for 20 minutes, then boom, it flies up again. Where does it fly up to? The next resistance level from Liquidity IQ. Then at the next circle, breaks out again. What happens? Do you buy there? No, you don't buy there. You wait for it to pull back again to the zone. And look, it did it again with that same pattern. So it's a repeatable pattern. I hope that's pretty clear. That's a gold trade from end of July. And Daniel, if we can go to the next slide.
And before we do this, Niklas, real quick for everyone, there was a question that came in. Does this also work for daily charts or just for futures chart? Yes, absolutely. So we're having some smaller time frame examples here, even though this is a 1 hour chart, it's not even that small. But yes, it works the same way on larger time frames like daily charts. And in fact, this setup that we just discussed, Rush being bullish, and we have a zone break retrace. This is something we trade all the time in our stocks scanning webinars, which happen every weekend. So yeah, it's a very repeatable setup, one of our favorite ones, which is we're able to identify by combining Rush and Liquidity IQ.
Yeah, and just take into account that I grabbed these examples, and me personally, I do a lot of day trading, but I did grab some other longer term examples we're going to see. And Daniel in the power scanning sessions every Saturday is always doing longer term with these indicators. They work on any time frame and asset type. Okay, so here's another example. So we were looking at a momentum breakout, but you don't have to use MA Rush and Liquidity IQ if you don't like them or it's not your style. All these indicators, the whole point is you're getting a story. You can find similar setups if you've got similar information to write, like Daniel was talking, chapters. What's the next chapter? If you can write the story in your mind on your chart of what's happening, you can find the same setup, different indicators. So in this example, this is actually the same. This is where it started out, but this is the same breakout as we had on gold. This is the same trade that happened, but it could have been found using trend radar and volume IQ. So what happened here? So the first thing we want to know is the market sentiment, right? We start there. When we look down at trend radar, the heat map, we see it's all red, long term, bearish, bearish, bearish. Finally, it snaps bullish. It goes green. There's a trend reversal. Volume, now that's good, trend reversal, okay? But what might be the best spot to enter? Is there really support? Is there something to use as a risk or a target? This is where we want to get smarter, and we look at volume IQ, which I always also use all the time. Volume IQ right here, we noticed that not only did trend reverse, but it broke through the most important parts of the chart, which we call the zone of control, which is where it's the most contested zone between buyers and sellers on any chart. There's the most trading volume. And we noticed that when that reversal happened, not only was there a reversal, but it broke through that zone. It got way above it, which means now oftentimes bulls are in control. So this was the sign of a breakout. Dan, if you can go to the next slide. So back, if you can move your cursor down at the big candle. So that's where the big break was. Now, just like with Liquidity IQ, on the previous example, we spoke about waiting for a pullback to get in. Well, just like where you would wait for price to retrace to that resistance level after it broke through, with volume IQ, when something snaps through the zone of control and you're using trend radar, you want to wait for that healthy pullback. See there, that's a red dip in a long-term green trend. We got a healthy pullback. And where did it pull back to before getting another big up candle? It basically pulled back to that zone of control, which was broken. So it's like a congruent concept. Two different indicators looking at two different things. Volume IQ doesn't even look at support and resistance. It looks at volume, but these things line up because they're actually giving real important information that the market's telling us with volume and with its movement. So that's a momentum breakout. Now, another type of trade we always do, we call it a bounce. We usually call it a resistance or support bounce, short or long bounce. Well, here we're calling it bounce with guardrails. The idea behind this type of setup is the market sentiment is telling you something. Maybe it's telling you that we're long-term bullish, and you want to wait for a pullback and then get a good spot to buy, expecting that we're going to bounce back up and you're going to get a good deal for the contracts or shares you purchased. So on this chart, you can see we've got those little blue and red arrows. This is actually a trade. This is from this morning at 10:30. It had a nice gain, like maybe 300, 400 US. Buying. Daniel said this to me. I saw that, and this is what's so good. Daniel said before, speed and clarity. Daniel called me and he said, "Hey, I just saw this setup on micro Dow Jones." I didn't even think about it. I just looked at my chart and I saw, wow, okay, yep, everything's very clear. So, and I entered. Why? Because we know where to put our risk and we can see the factors that are adding up to make it make sense. So on this chart, the market sentiment, I could see in TI matrix in the bottom right there, that even though I was on the 5-minute chart, we're pulling back a little bit on the 5-minute, right? We had a little downtrend, but on the longer term, I could see, hey, it's still bullish. We got nice scores there. And overall, it's pretty bullish. So maybe this isn't going to last so long, this pullback. Then I thought, okay, well, maybe it is going to last long, right? Maybe it's going to keep dropping. So we get a bit smarter. We look at liquidity IQ, and these are those guardrails. What do I see there? Those are liquidity levels. Liquidity IQ is telling us these are really important lines in the sand on the chart, and we don't have them hovered there, but you see those little, kind of looks like a glow, or like it's colored in that area. Those are what we call liquidity captures. It tells us that price, a lot of volumes coming in, the levels holding up. So we saw that there was a lot of volume coming in, a lot of liquidity. We had guardrails for the trade, right? These three lines down there. I know where I could put my stop. I know when to bail out of the trade. If the level doesn't hold up, well, I'm not going to be silly and hold on to my trade. I'm just going to get out. So it was easy to place a stop. I felt confident. It wasn't going to lose a lot if it went wrong and went long. And then once we started to go back up, I thought, okay, that's enough and started to exit out. But that's a bounce trade. And we can go to the
Yeah,
next slide then.
exactly. And just to add on to this, yeah, this is a trade we took this morning based exactly on these two indicators. And what I really liked about it is because it, first of all, it gave me a very clear read of what the current market story is. We were bullish overall, and this is a pullback to a key support level. So that's the current story. And then my prediction for the future was, okay, we're going to bounce off this level, calls the bounce trade. This is a key support level. It will hold, and we're going to resume our overall bullish momentum. So that was my forecast. And then the beautiful thing about this was I knew exactly when to exit the trade if it doesn't work out. Because with this prediction, if this level, this red line does not hold, if price goes below it, I would exit this trade. Because at this point, my prediction for what would happen would be invalidated. And that's also very important to know for every trade. You need to understand when to get out when you're wrong. And you need to stick to that policy when to get out, not to like hope for the best, oh, it's going to turn around. No, that's not what you want to do. You get out when your prediction, when your forecast about what will happen next is no longer valid, is no longer in the picture. So once again, it's very important to figure this all out before you enter the trade, because this will make all the difference between an ad hoc trader, who hopes for the best when he trades, or a disciplined, systematic trader.
It's going to ruin your day and it's going to ruin your motivation to trade. And it's going to ruin your account if you're an ad hoc trader. And trust me, like after a while of trading, when you're trading systematically, sometimes maybe I put my stop a little too tight and then it comes down and stops me out and then it goes my way. Well, there's always next time. And honestly, after you stop trading ad hoc and you follow a pattern and you listen to the levels and things that actually technically make sense, you're going to start to learn to be happy when you have a small loss because you're like, all right, whatever. It didn't turn into one of those big losses.
Yeah,
Okay,
absolutely. All right,
Daniel,
next
so
one.
you can go to the
Yeah.
next one. So here, this is the same type of trade. This is now on a daily chart on Tesla. And in this one, we're using TI matrix again, but volume IQ for the market IQ. And this was actually a trade we spoke about back at the time in one of our weekly lunch and learns. We said, hey, this is setting up. We pointed it out. So here what we saw, or what I saw on the chart, is that with TI matrix, even though we're pulling back, so just this is March, the beginning of March of this year on Tesla, it had fallen almost 50% within the span of 3 or 4 months. It was dropping, dropping, dropping. But even though it was dropping so far, and you can see in the first column there in the daily chart, everything was bearish. But on the weekly and the monthly, when you looked really long term, it wasn't even that bearish. It was still kind of bullish. So that tells you right away we're going up, we're pulling back in the short term, but it's not over yet. There's still a long term uptrend. So that's the market sentiment, right? It might be a good time to buy the dip. On volume IQ, well, where are we going to buy the dip, right? Are we going to wait for it to go down to 100? No. Volume IQ is showing us there's a high volume node, which is kind of a whole chunk here from maybe 220, 200 to 220 up to like 280. That is the zone of control. That's where the most people are in, or the most big time players own their shares. You can see, look above that in the volume profile down here. Look how blank it all is, how there's no volume from up there, all the way up to the top. Those are the people who got in late. Everybody, the big holders are selling into those traders. They're waiting. The big guys are waiting for it to come back down to get in where they got in the first place and rinse, repeat. So as we were coming back down into there, that's telling us, hey, once we get in there, that's a good spot to buy. It's the zone of control. And once, look what happened. Price dropped in there. It just fluctuated. Look, they started picking it up in the bottom end of the range because they want everyone to panic so they can get cheap shares. It ranges around the zone of control, and then finally it picked back up. And today, I don't know what Tesla's at, but I think it's up about almost 50% from that moment, not that many months ago. So that's a bounce on the daily chart. So the next one is gold on the 5-minute. This is from this morning at 6 a.m. Eastern time. So here, the market sentiment was look at trend radar, long-term bullish, right? We got the long-term green, pretty much green, lots of pullbacks and noise, but the uptrend's staying up there. It's staying consistent.
Yeah, and by the way, a quick note, the lowest line here on trend radar, this green and red heat map, that represents our long-term trend. So we can see long-term, we are bullish, but the medium and short-term trends, they have these red patches, just like at 6 a.m. this morning, a little red patch, which we call a healthy pullback. Continue, Nicholas.
Perfect. Yeah. Yeah. That's a healthy pullback. So you could have noted that that's a healthy pullback. If you look back on the chart there, these 4 row down red spots didn't really hold up in the heat map before they fluctuate back to being bullish. And one thing that might have given you confidence to enter in on this pullback is looking at volume IQ. This is kind of the smarter. This is the IQ portion, looking for, well, why would I buy in now? Okay, there's a pullback, but why should I believe that it, or why is the reason to believe that this might be a decent entry point? Well, we could have noticed that price wicked down and then it wicked back up. It got bought once we fell into a buy bias block with high volume. So we can see above us there's low volume, but once we entered into that 3,450 range, nice round number, it seemed to bounce back up and there seems to be buyers there historically. It's a high volume chunk. And you can enter in, could have entered into there, maybe a small contract with your stop below at the next seller block. If you could look down there, Daniel, where we can expect, okay, maybe selling's going to accelerate. Let's get out before it goes down there. And
And
if you
by the
look at,
way, yeah, the buy blocks and the sell blocks, these are denoted by this greenish rectangle here to the right of volume IQ. This greenish one, this is a buy bias, and this reddish one, that's a sell bias. And if it's black, it means it's more or less neutral.
Yeah, and yes. So yeah, you could have found a target, an entry, a stop, a reason to enter. And if you look at gold today, that went up basically 30 points from here, from this point. Okay, so if we can go to the next one, Daniel. All right, so this is another this is actually another reason why maybe I think yeah, well, when Daniel called me and he showed me this, I didn't look at the indicator. I was actually just intuitively noticing, but it showed us what was happening. So market sentiment on Dow futures today. This is what we call, sorry, I actually didn't say the name, a bias-based trend entry. So you notice the direction we're going and you want to get in on the trend. You just want to wait for that smart IQ moment to enter in the trend. So on the Dow, we saw that it was going up. You can't see the marker here, but MA Rush actually on this chart was going up, okay? But the focus here for the market sentiment is this correlation. So if you can go down there, Daniel. So we could see that the Dow on the left of that 60, that's the short term. It's telling us that in the short term, there's no correlation between ES and Dow. But in the long term, there is a decent correlation. And what we noticed once we noticed that is the Dow is pulling back. It hasn't bounced up yet. In the bottom left here, Daniel, on the chart, we can see that's what ES, what the S&P futures looked like at the time of this pullback on Dow. The futures for S&P or ES, they were flying up. They were having no problem rising, and the Dow was struggling. But we knew that the Dow tends to follow the S&P. So right away, the intuition, the sentiment was, hey, it's probably going to follow soon. Maybe it's a good time to buy. Maybe it's going to catch up.
Yeah, exactly.
And
So or in other words, our market understanding, our market story was finding, okay, the Dow is a laggard. It's lagging behind ES. ES pushed high, the Dow not yet, but it's going to play catch up. That was our prediction for the future. And this is yet one more checkbox of why this morning, Nicholas and I, we took this long trade. When the Dow came down to this key level, we saw ES flying up. We knew they were correlated with a relatively high correlation score. One has moved already, the other one did not move yet. It is likely that the Dow will play catch up to ES. And for it to catch up, it would need to move higher as well. Yet another
yeah, and
checkbox for a long trade.
And to start out, like that's the sentiment part, right? We have a feeling that's going to happen. But do feelings always pan out? No. So we want to get a little bit smarter. Find out, is it a high IQ, for lack of a better term, time to enter? We looked at liquidity IQ. What did we see? It's supported. That's a great entry zone. There's a bunch of guardrails that we can use, levels as our stops and as an expectation that they're going to hold, because in the past, those are important levels. It's a point where things pivot. So that gave us extra confidence in the trade. And for me, it was the trade of the day, thanks to Daniel.
Yeah, well, thanks to the indicator. So
Yeah, true.
in preparation, in fact, for this webinar, we did our market review. Of course, running a business, we sometimes get distracted with other things like customer support and talking to partners. But in preparation of this webinar, we put all our indicators on onto the charts that we typically trade, and we found these setups and even other setups very easily. This morning was a nice trading day, a very consistent trading day where trends actually lasted for quite some time. And once we were in the move, it actually wouldn't whipsaw us out right away. So, Thursdays typically tend to be like this across the week. All right.
Daniel,
Yeah.
could you do me a favor? Could you go back to our gold example,
Yeah.
MGC?
Mm-hmm.
Okay, so we had a question here from Paula. Was there a bearish signal prior before it started going down? No, no. And generally, you're not going to have maybe the fact that we started to have more sellers and volume IQ up at that level. If you could see there's a seller block, maybe that could have been a sign. But generally, before a move happens, you're not really going to have a signal unless there's levels up there. If we put on maybe a liquidity IQ, maybe there was a resistance up there. But in this example, you have that's a great point. I bet you there was a resistance up there. Wouldn't be surprising, which is why it's good to have IQ indicators.
And by the way, the topic of signals right now, it's all about understanding what the market story is, what's the sentiment all about finding levels and interesting volume areas and volume nodes. That's one thing. But when it comes to trade signals, very concrete, that's buy or sell signals. That's yet another level which we will add onto our process. And this will be covered in the sequel of this tech talk, which will take place in a couple of weeks from now.
Perfect.
Just as a bit of a heads up.
Yeah. So this is step 1 and 2, and then step 3 is going to be signals. So Daniel, I think that's it for our setups, is it not?
Yeah, perfect. Okay. So before we get to your questions and also to the live markets right now, a quick reminder that we do have a super special going on right now in celebration of this tech talk, where we do offer all of these 6 indicators at a 30% discount. All you need to do is to go to tradingindicators.com/story. So we could bring you to a page where you can learn more about all of these different indicators, and just make sure to enter the discount code STORY on the checkout form to actually get this 30% discount. And as mentioned before, this is a limited time offer, but it's a lifetime offer, meaning once you have the indicator, you will own it for life, which I believe is something important to have. These are indicators which we use every single day in our trading, whether we trade futures or we find interesting option setups with stocks, or we scan for swing trading setups. These are the indicators which we are using all the time as part of our trading process. And as mentioned before, each indicator will fulfill or is fulfilling a very specific need. We don't believe, on using indicators just for the sake of using indicators. No, each indicator should bring something in addition to the table, which you didn't see before. That's the entire point. And this is what we achieved with these 6 indicators. These are truly complementary. There are small overlaps, but overall, each of these indicators brings a unique perspective and adds on one additional puzzle piece to decipher the current market story. All right, so let me see if there are any questions at this point. And if you guys have any questions or simple requests, please put those into the Q&A box. And I do see some.
Yeah, Daniel, I've been watching the questions, so I think we got to all of them except for, Lenny has a question. He said, why do you do your analysis on DIA futures and not the main index? I thought the answer would just be because we want to be able to trade from the chart we're analyzing.
That's right. Yeah. So yeah, the futures, they are directly tradable. You can trade the index directly. And, if you trade futures, this is typically what you would like to see, because, even though they are heavily correlated, of course, but they still meet because they have different expirations. Futures expire at some point. The index is just calculated but never expire. There might be difference in terms of price action, perhaps small differences in terms of volume zones and support and resistance levels and other things. So that you always want to do your analysis on the symbol, or your primary analysis, at least, on the symbol that you're actually trading. All right. So we do have some questions. Let me put up the offer again. So Sam wants to know, the indicator that you spoke about, will it be part of the current package? All right. So Sam, in fact, this is not a package offer. You have the ability to mix and match the indicators to your liking. So you can, of course, get them all as a package. You will get the 30% discount. Or perhaps if you want to start off with, let's say, MA Rush and Liquidity IQ, which is a very popular package that many of our users are using, you could do this as well. You can mix and match them. For each indicator, you will get a 30% discount. So Sam, yeah, just mix and match it to your liking and to your trading style. So Paula has some simple requests. We're going to get to these. Marcus wants to know, he has the Liquidity View dashboard. If he purchases an indicator through the special, will these be available on the Liquidity View dashboard as well? No, Marcus, they will not. So the Liquidity View dashboard is locked in that sense. It comes with already with Liquidity IQ, MA Rush, and Trend Radar, but the other ones, they will not be available on that dashboard. But we may add them later on to the dashboard later on this year, but this is a different story. So these are standalone indicators to be used on TradingView or on NinjaTrader or ModifWave.
Daniel, yeah, Paula, if you could please clarify, would you like to see those on a swing trading time frame, daily time frame? Those simple requests. And Olu asked, why don't we use any Forex example? Well, we can look at a Forex example. I'll pull one up when we share the charts.
Yeah, absolutely. So yeah, we do have many forex traders in our group. We personally trade typically in the futures space just because volume, which as you can see is an important part of our analysis, is centralized in the futures space, and in our view, a bit more telling when you analyze centralized volume instead of just simply tick volume. But besides this, yeah, we can definitely apply Liquidity IQ, MA Rush, Trend Radar, TI Matrix, and the other ones to FX pairs as well. Okay, Paula says she wants to see the daily time frame. That's great. All right.
Gus says, can we set at 1 minute execution and use the 5 and 50? I'm not sure in what context you're talking about, Gus, if you mean with automated trading on MotiveWave or something, but with our indicators that have multi-time frame features like MA Rush and Liquidity IQ and TI Matrix, and TI Matrix, you can set them to any time frame you want, or at least from this drop down easily. Yeah, higher time frames. We do that all. We always do that. And if you're on MotiveWave, you can put any of our indicators, go on a 1 minute chart and put any of our indicators and use MotiveWave's feature. It allows you to set it to a higher time frame, and similarly on NinjaTrader.
Yeah. Calvin wants to know, can you use these indicators on MT4, on MetaTrader 4? Calvin, some of them. So for MT4, currently we do offer Liquidity IQ and MA Rush and Trend Radar. So these three ones, and you can see it once you go to this page here, tradingindicators.com/story. You click on an indicator, it will give you all the information and all the platforms for which this indicator is available. Gus wants to know, is TI Matrix available for Ninja or TradingView? Yes, absolutely. In fact, we just released a brand new version of TI Matrix for TradingView. Just when was it, yesterday or the day before? I believe it was Tuesday, which now allows you to customize all the different timeframes that TI Matrix looks at. This is available for TradingView right now, but we are going to add this to NinjaTrader and ModifWave shortly as well. And Sam wants to know, what is the name of the module which gives you the stock scanning feature that we, for example, use on Saturdays in our scanning workshop. This part is called Liquidity View, and Sam sent me a quick, or Nicholas, maybe you can put the link.
I responded to Sam with the link to tradingindicators.com/view. So check your response to that question,
yeah,
Sam.
That's a different tool, Sam. Check it out, which is basically our dashboard, which allows you to scan for interesting setups across thousands of stocks. But this case here is about understanding the market story on either TradingView, NinjaTrader, ModifWave, MT4, and the like. Perfect. Okay, I think we went through some questions. That's good. If there are any additional questions, please don't be shy. Put those into the Q&A box. And Nicholas, let's look at some live charting. Are you ready to take the screen?
Yes, sir. Okay, let's get into it. Let's give me a moment right here. Okay. Sharing screen. Oh, I just sent a request.
Yep. Gotcha. There we go. Okay.
Okay. So I'm going to share my monitor with TradingView. All right. So to start out, just to answer Olu's question real quick, why didn't we use any Forex examples? Well, here's the indicators on a Forex chart. And this is USD CAD. And we can see, hey, they do work very well. So this is on a 15-minute chart of USD CAD. This was just yesterday at noon. What happened here? MA Rush, our long-term trend indicator, swapped to bearish. And this is liquidity IQ with these resistance and support levels. It signaled what we call a zone break. And if I turn on a feature from the indicator, liquidity IQ, called mentor mode, it'll help you get acquainted with the indicator and point things out. So it tells you, hey, here's a support zone, here's a resistance zone. And this was a zone break. So it told you here, hey, it just lost the zone. And what happened? Hey, that would have been a great signal to trade in on. It's just been trending down ever since then. So all the indicators that we were talking about, yeah, they do work just fine on Forex. I think we just have not that many Forex traders. We have more stock and futures traders, so we focus on those a bit more. So Paula, I'm going to start with your symbol requests. So let's go over to ES. And before we do, actually, I'm going to point out on Dow. This is a trade I actually entered, Daniel, while you were talking at 618. So this was Dow. This is on the 15-minute chart. So we took a 5-minute trade on this morning, but this was that trade from back then. We're bought all down here, then we sold as it went up. Why did I enter long here? Well, I combined the indicators and they gave me a smart market story. So I saw for the sentiment, I saw a couple things. One, we're really bullish, or at least we're bullish. We got that pegged down. I also, and this is MA Rush, our indicator MA Rush. See bearish, bullish, bullish. It tells us overall multi-time frame momentum direction. I saw we're bullish. I also saw in trend radar, which is kind of more of a microscope on the trend, that we're very long-term bullish, 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 bullish. A little bit of a mix up here. That's when we actually took our trade this morning. And we're back to bullish. And I noticed we're having what we call a healthy pullback, which is a 4-row or 3-row red snap in the inside of the heat map. So that's our market sentiment. So we're bullish and we're having a pullback. Then I thought, all right, that's good. But I want to know, well, where's actually a smart spot to enter on this pullback? So I looked at two things, liquidity IQ, which gave me this support level all the way down here, resistance all the way up here. And that's not that much information, right? We know that, okay, if it goes all the way up to here, that's resistance. If it comes all the way down to here, it's probably going to be bearish at that point. So I looked at volume IQ, which is this indicator here. Let me just get this out the way on the right. And I noticed some stuff which made me decide to take the trade. I noticed that the zone of control, look at all the volume here. There's tons of volume and there's actually buyers right here, right around this range. I notice we're coming down into an area that has lots of activity, which means if it drops down there, it's probably going to start trading slower because there's more traders willing to buy and sell there. And I know the most important part, that if price cannot hold this zone, that's not bullish, that's bad. So that gave me a good place to place a stop loss. So I started entering, I bought 3 contracts, and my logic is, even if we come all the way down to here, I'm still going to buy. I'm actually waiting for us to come down to here to buy more because I don't only want to have 3 contracts. I want to buy more. So I'm not being ad hoc. I'm not just buying. I'm actually thinking ahead. I'm not just going in all at once. I'm thinking, hey, I'm going to take some here just in case it just starts going back up, right? Because there are buyers here. So I want it to be on their side. Just buy in a little bit. If it drops down to here, I'm actually going to buy more and get a dollar cost average, get like an average position price around here. Why is that? Well, I know that it's going to give me a good reward to risk ratio because I'll be hoping, my plan is that we're going to rebound and go back up here, maybe to try that resistance. And that's, look how far, if my average entry price is here, how far away my target is compared to where I'm putting my stop. It's like 3 or 4 to 1, or maybe a little less. That's a great reward to risk ratio, and I have multiple factors in my favor. So why did I put my stop here? Well, a couple things. Some of it's a bit of intuition, but it's mostly the indicator. I noticed that the big chunk of volume, look where the biggest node is, the biggest level. It's right here, around 45,580. Maybe roughly 45,600, but more around the 80s, maybe the 70s. I have a feeling we have this, what we call a stair-stepping pattern, that once we get below that, it doesn't look so good. There's not that much volume. And look on the right here, it's all sellers. People start to panic once we get back there, once we get here. So I don't want to be stuck with the people panicking. I want to get out before we get down to an area where it's a bunch of people selling and not a lot of volume, right? So this is a whole story I was able to, and for volume IQ, maybe that might be overwhelming. A lot of traders don't trade with volume profiles. We've got like 4 hours or something or more of a master class explaining all this stuff and how to interpret it. Um, but yeah, so I took this trade and I'm not just buying it and hoping for the best. I bought it. I don't even think, I think -$4, I think I might get down to -$80. I'm not scared because I already have a plan. I'm planning to try and get a better entry down here because then I've got better reward to risk with my stop just down there. So yeah, I just wanted to talk about that. And all right, I'm going to go ahead now. Let's get through the symbol request. Sorry for rambling a bit there. Okay, so let's go to the daily chart. And I'm just going to start with our standard tools here a little bit. Boom. Okay. And I'm going to put us on long term. This is a setting. So I put it on the long term. It's going to give us, make sure we have some longer term time frames. Okay. These are kind of the longer term time frames. And I'm just going to, all right, we got 2 ones for the month here. But I'm going to make sure MA Rush is onto the daily chart. And liquidity IQ is set up okay. Volume IQ, good stuff. Okay, and remember, I have 5 indicators on the chart here. 6, no 5. You don't need to have all the indicators. Most of the time, I don't. I have 2 or 3. So wait for liquidity IQ to load here. Oops, I thought I sent it to the 1 day. There we go. So we're going to look at some of these charts. NVIDIA, it's a stock.
And we actually had a question, I think, from Paula. Will NVIDIA rebound from the earnings? And actually, before we analyze this from a technical point of view, I just want to say or repeat something I mentioned in the very beginning. Perhaps you remember when I said technical analysis oftentimes is so much more straightforward than fundamental analysis. And NVIDIA, I believe, is a really good example for this. So the earnings came out yesterday, or well, after market close. They came out recently, and they were good. They were, for the most part, above expectations. Yet, price dropped after earnings by a couple of percent. Nothing dramatic. I'm going to talk about this too. It's definitely nothing dramatic at all, but price dropped. But you may have expected, or anybody, who sees, surprise earnings higher than expected, price would jump up. It did not jump up. This is the reason why fundamental analysis is so complicated and almost impossible sometimes, because you don't know how much of this was already priced in. Maybe for some reason, the market priced in a surprise already. It's almost impossible to know how much comes as a surprise and what was already expected by the market. And in this case, obviously, something unexpected, even negatively unexpected happens, even though earnings came above projected numbers and markets dropped a little bit. Now, is this a dramatic drop? Absolutely not. And you can
It's not even 1%. Yeah.
It's not. Yeah, I think it dropped 3% to the low point there, but it recovered a bit. But look at trend radar. It didn't even flinch. It's still all green. So oftentimes you see a little bit of a red patch in there, which is a pullback. We had a pullback a couple of 2 weeks ago in NVIDIA. This earnings outcome basically was super flat. So these couple of percents didn't rock the boat at all. NVIDIA is still absolutely bullish. Nothing has changed. And in terms of market story, if I just look at this, I see this as a very extremely bullish setup to the degree that it's extended. It's super expensive right now. Trend radar is all green. And all price levels were trending upwards.
And you know what, Daniel?
Yeah.
Oh, sorry. Can I just say one thing?
Sure.
I saw this. We saw it on Tesla. Now, look, I think volume IQ is really good on day trade. Long-term time frames because it shows you, unlike on the 5-minute where there's not huge amounts of volume in short terms, on a weekly chart, on a daily chart, you really get a picture for where the big time money is entering. Look at the volume here. I can't even see it. No big players are buying here. They're slowly selling into everyone who I think might get, might not be the best story for them if they're buying up here. They like to buy down here, the bigger players. That's the first thing I notice. I just wanted to mention that. Looks extended.
It does look extended. And I was just about to say, if I was going, or if somebody asked me, hey, when would you go long NVIDIA? I would definitely wait until we pull back a little bit. At least a level 3 pullback on trend radar. You see this little red patch there 2 weeks ago. These are 3 levels down. It's a level 3 pullback. Something like this to get a little bit of a cheaper price point and then potentially enter into this extremely bullish long-term uptrend. In terms of levels, if you go to the right again, we can see that we broke above former resistance back there in June this summer. We broke above it, and then price hasn't looked back. And yet now we're trading quite far away from that broken resistance level and also quite far away from our averages. So super extended, and also TI matrix, if you look at the trend score, 3073, that's a high score. So yeah, it's very bullish. Just understand that sometimes if we're that bullish, a correction is in order. So just be careful with Nvidia. It's an expensive stock. Of course, it's a hot stock, but I personally would wait for a bit of a pullback before I would consider anything long.
And look at this too, Daniel. We got 5 stars, full bar on all the time frames. We're just starting to pull back on the shorter time frames, not even on the daily.
Yeah.
And look at this on the longer terms, like the weekly, the 2 week, the monthly. Where are their trend lines or their trend all the way back at 160, 130? If we look at the level that was broken, where is that? It's between 160 and 130. It's 150. And where do buyers start to step in? Big time down here. Look, 2.5 billion shares, 135. And where's this? 135. So I think we're going to get a pullback. A lot of traders are going to start buying right here, and they're going to drop it even more. Look, there's sellers here. That's what I would expect. I certainly wouldn't buy it right now. I would wait back at least to here and then not even expect it to stop going down here. And that's just the picture I see.
Yeah. Let's do some rapid fire of some symbols also
Yeah,
on
and I'm
the
going to go quickly through them just because we have a lot.
BRKB.
Oh, okay. And sorry, guys, if we don't get through
Berkshire.
your symbol fast enough. Okay, so Berkshire. So what do I see here? Right away, looking at TI matrix, we're super, super, super bullish. In the longer term, or the 2 week, the 1 week, slightly longer term, we're not that bullish. I think we're getting a little bit of a pullback, and that's probably a consequence of us kind of having this little downtrend we had here. We came down to a liquidity level. A lot of traders bought here, big volume. We bounced. Trend radar down here. We went bearish, and then now we snap back to bullish. It's starting to get extended in the short term. That's this little dot means we're really taking off. And we can see over here in the short terms, the daily, it's all blue or green or whatever this is, cyan. We're pulling up. And what I would think right here on this chart, and of course, MA Rush is bullish, is per volume IQ. Look what we're coming up to here. Sellers. We're coming up to sellers. I would wait for a pullback until we get to some buyers. Maybe down here, maybe here, somewhere where there's significant liquidity. As we go up into thin air here, look, there's less and less volume. You want to be getting in where a lot of people got in. Instead of being the one who's late to the party. That's what I would think. I would wait for a little bit of a pullback, but high chance it just flies right up. But that's just my conservative outlook. What about you, Daniel?
Yeah. Oh, same here. I was skeptical, Berkshire. Of course, it's long-term bullish, no question about it. But here, something, and maybe I get influenced by fundamentals, but ever since Warren Buffett retired, I believe he's completely retired now, or at least he will be very soon. I thought, oh, that probably will have a drop in stock price because this will introduce some uncertainty. How is it going to continue? And in fact, it did. There's, can see the drop there. I personally think it's going to drop even further because this may just be a correction within that drop already. Prices bounced up a little bit. That's my personal view, but this is again influenced by fundamental expectation, which is super hard to get right. Lenny wants to know, what's this magenta part in volume IQ? Maybe just go back there.
Magenta. This stuff. So I'll explain what volume IQ is really quickly. So there's two different colors, and there's color themes. So it could be green and red. Here it's like kind of a magenta and a cyan, or however you pronounce that. It's the difference between sellers and buyers. So at this level right here, this is how much volume there was. Right here, this is how much volume there was. Here, there's a ton of volume. The red or magenta portion is the estimated amount of selling volume. Traders selling into the market. And the blue or green or whatever it is at the time, that's the portion of that big chunk of volume that traded at that level that is expected to be buyer volume. So here, for example, we can see way more sellers than buyers. Here, more sellers than buyers. And when there's a lot of consecutive levels where there's more sellers than buyers or more buyers than sellers, we have what we call a biased block or a biased zone, which is highlighted here on the right. Here, see, they're all red. It gets wrapped up in this square, this rectangle, telling us, hey, this is a place people like to sell. This is a place people like to buy. This is a place people like to buy. So I hope that explains. And over here, these are what we call action zones. I'm not going to get into them, but they're basically telling us here, this is where things like to slow down. These are really important zones. And these are areas where price doesn't spend a lot of time, and price is probably going to accelerate through them. If we're approaching them from the top, they're red because we're probably going to sell through them. And if we're approaching them from the bottom, like up here, we're probably going to fly up through them. So yeah, that's just a quick explanation, but we do have a full 4-hour class on that. So I'm on Dell now. This was from Paula. All right, so what do we see on Dell? Well, we see we had a nice zone of control over here. A lot of sellers, but price is grinding up through them. So I bet you I wouldn't be surprised if there's a lot of shorts on Dell because there's a lot of selling historically, but price just keeps going up. The control is in the favor of bulls. Look at Trend Radar. Bullish trend. We had a nice pullback here not long ago, a week ago, 2 weeks ago, and we're resuming the trend from it. MA Rush is bullish. TI Matrix over here, it's bullish. It's kind of neutral, but it is picking up. In the longer term, I think we're a little bit less bullish than we are in the short term. What would I think here? Well, we got resistance up here. I don't know. I don't like that there's a ton of sellers here. I would personally on this one, I would like to get anything on a pullback. And to me, a nice pullback spot would ideally be there, but we would have to see as things, or right here, actually, there's a liquidity level. But yeah, what do you think, Daniel?
Yeah, I totally agree. It's wait for the pullback and then back to the zone of control, or at least this broken resistance level as per Liquidity IQ for a better entry. Lenny wants to know, is volume IQ available separately? Yes, Lenny, all these indicators are available separately. Actually, this is not a bundle price we're offering. You just get a 30% discount. Not just, but this is a great discount for each of the individual indicators, Lenny. Yes, so you can mix and match them to your liking. Let's do Orla next.
Okay.
Yeah, let's go to some other symbol requests.
Yeah. Okay.
So
Orla.
Orla is a gold stock. It's, I believe, in the mining or gold mining stock. And I like this one because you just drag it out a little bit so it's a bit bigger.
Oh, you mean zoom in?
Yeah, sorry, okay. Zoom in. Yeah, exactly. Make the bars a bit bigger. Yeah, interesting setup because here is Liquidity IQ set to the daily chart? Can you just double check?
Yeah, it is.
Yeah. Okay, perfect. Yeah. Okay. Yeah, uptrend for sure. Steady uptrend. We came down to near a support level. You can see it there. Liquidity IQ just nearby there after we broke above this one.
50 cents off. Yeah.
Yeah, a nice bounce of this level to the upside. And now I like this one because we are right at this high volume node. You can see this high volume node coming up with buyers. And if I had to make a prediction here, if we get into this node, I think the next stop will be, and this is another concept that we look at frequently, will be to see a gap fill. See the little down gap on the left-hand side? I think this gap is going to be tested or filled once we get into this high volume node, which is buyers dominated. So once we get there, I think the next jump will be up to fill this gap and perhaps even all-time highs.
Yeah,
so
Daniel, on these smaller price stocks, round numbers are a big deal. So here we came up, we hit 11, this week, went up to what's the high of 11.14, came down a bit. Now we're in a zone where, we might get a bit of selling right here until we see these buyers. But if we can get above just 11.14, like Daniel said, there's that gap. If we can get up to there, that's what is that? That's 7%. That could happen in a day, up to 11.70, filling that gap if we start to come into here.
Yeah, absolutely.
Okay, the next one I'm going to look at is let's look at SFM. Sprouts Farmers Market. I've heard that so many times. Yeah.
My arch nemesis. Yeah, I'm personally long this stock. It's pulling back. It's a super bullish stock. You can see the uptrend continues for many, many years. It's experiencing a bit of a correction right now, which actually went a bit further down than I expected. So we're correcting down. We're now at the 140 level. A down day today. I believe that the current price levels may be the bottom. It coincides with a former resistance level, which may now act as support. So I personally am still bullish. You can see on the smaller time frames, of course, we corrected quite a bit down, but the longer time frames, daily and monthly, or well, at least the monthly ones, they are of course still bullish. So if you're not in this symbol like I am, maybe now it could be an interesting time to consider this one in the anticipation. Okay, the overarching uptrend as per MA Rush, at least that's my interpretation, is going to resume after this deeper correction. And of course, this was a really huge move upwards. Corrections are deeper afterwards. So this could be an interesting time now to consider a long entry if you're not in this stock yet.
And what I would love to see on this, which would make me buy this, is it's so bullish long term. I'd like to see, we're losing some volume here, like a volume node, some panic selling. Volume picks up, volatility picks up. It comes down into this zone. We get a liquidity capture, then buy, and see a higher low, and then resume. But yeah, it does look. It still looks very long-term bullish. Okay.
Let's do NVO Novo Nordisk.
Okay.
It's an interesting
NVO?
setup. Yeah.
Novo
So this
Nordisk.
setup also asked by Steffen. I like this one. It's interesting. It's an interesting technical setup. Why? Because this one is a bearish stock. We went bearish back at the end of last year.
New Year's,
prices,
yeah.
have been continuing downwards, but now it's interesting. If you zoom in to current price action, where are we right now? Well, first of all, after this big gap that came down, we came up right back to the broken support level. You see this red line there? This is our bearish zone break retrace setup. Would I go short right here? I personally would be careful. Yes, this could be an interesting short setup, but I feel that maybe price is attempting to fill the gap above, which is coinciding right now with the zone of control of volume IQ. And should we be able to get up to the 68 level, I think this could be an interesting short opportunity.
This is super interesting. If we get up there, and I was actually thinking for a long here, if you were going to say that, for a couple reasons. Now, look, although we are very bearish, if we weren't looking at the market sentiment, which we should, there is still an argument to make with the IQ indicators. So two things I see here is, that the zone of control is up there. It coincides with resistance. We got that gap to fill. But look what happened. That big drop, everybody sells. There's huge volume here. This is almost the zone of control. It's very comparable volume, right? Now we're above that. Now everyone who shorted late is underwater. Anybody who was shorting in this price range is now not having a good time. There's a lot of trading volume here, and we grinded above it. If we can get some liquidity captures here and price starts to make it above this, we might start to see a shift in trend radar going bullish, and we've got buyers here historically. So maybe we'll start to then see that gap fill and then get out because, of course, it's very bearish.
Yeah.
Counterintuitive trade.
Nicholas, we're going to do a few more symbols in a bit. Let me just quickly grab the screen one more time to bring up the offer again, because there were some questions. So the offer link is here on the slides, also in the chat. It's tradingindicators.com/story. So go there and then enter the discount code STORY to get the 30% discount. As a limited offer, this is going to go away, and this will be for lifetime. So you will keep the indicator for life. And this applies to any of these 6 indicators mentioned here. And you can mix them and mix and match them as you like. So you can, use this discount code multiple times. All right, so tradingindicators.com/story. And this is not a bundle offer in the sense that you can pick MA Rush or perhaps Volume IQ or perhaps 2 of them. And for each of those ones, you will get the 30% discount. By the way, we also offer substantial training for all of these indicators. So Niklas has mentioned concepts like liquidity capture or high volume nodes or zone of control or action zones or bias, buy bias and sell bias. These are concepts that you will learn all about once you get the indicator. So each indicator comes with substantial training material. We will also cover these in our weekly sessions every Tuesday or on the weekend when we do our scanning. So you will not be left alone with these indicators. You will get our full support. And of course, you will be enrolled, if you're not part of it yet, to our trading community, which is a great, friendly, and super helpful community of traders where we exchange symbols in our Discord channel, for example, where we ask questions, where we help each other, where we find trades together. That's really fun. And one of the main reasons why we are doing what we are doing, which is developing these innovative indicators. All right. So let's go back to the chart for a few more symbols, and then
Yes,
we're going to wrap
yes.
it up.
Perfect. I'm going to look at Shopify. All right,
Yes.
so Shopify. Okay, so first thing we check, right? Sentiment, clearly bullish. It's been bullish since July 2023. Trend radar, very bullish, almost to an overextended extent. We're probably going to see a pullback here soon, and that's the sentiment, okay? And TI matrix, what's going on here? Very bullish long term. Starting to see a bit of pullbacks. I'm surprised we haven't seen one in trend radar. Gap, big gap. We flew up through here. I would like this to come down to a resistance because we're okay. We have the sentiment, right? Now we want to think, well, all right, the sentiment's going up. What's the spot we want to enter? How can we be smart about that? Well, for this, we look at liquidity IQ and volume IQ. Liquidity IQ, where's the nearest important level? It's not here. It's, $10, $12 down, around 130, 129. That's not enough though for me. I mean, there's buyers here. There's not a lot of volume. I'm thinking I'd like to get it even cheaper, down where there's a lot more volume and maybe scale in there. What do you think, Daniel?
I agree. Yeah. I think this level, if we come down to this level, I think we're going to go past this level further down. There's also a gap just starting below this level, which we probably going to fill once we come down. And once we fill this gap, I think we're already below this level. We're going to come down to the zone of control of volume IQ.
Oh,
Yeah.
the zone of control? No, maybe the high volume node.
So that's what I meant. Yeah, this high volume
And
node.
there's lots of buyers there.
Yeah.
Yeah.
So yeah, I'd be careful entering Shopify right now to the long direction. Of course, we may be wrong. It can happen, but from a technical point of view, there is some evidence there that hey, this correction in which we're in right now after the all-time highs might continue a bit further down.
Okay, the next symbol is air test systems. Whoa, okay, this one's flying up. That's to me not very pretty. It's already from May 1st. It's up. What is that? 100, 200, 300% in about 3 months, 4 months, or however many months that is. It's already up, 300%. So that's pretty wild. Finally, things went bullish. Now, look, let me just give a tip here. We actually had a question from Paula, I think, and said, should we enter or, should we pay attention right when MA Rush goes bullish? Now, remember, MA Rush puts these little labels here. Remember, they're not trading signals. Okay, we're going to talk about signals later. We don't use these as trading signals generally. We have before to show they are useful as them. But when MA Rush goes bullish or when MA Rush goes bearish, remember, it took a lot for this indicator to decide, okay, there's a shift, which means oftentimes when it gives the shift, more often than not, there was a big event or it's been going up for a while or down for a while, and there's probably a pullback. I think most of the time, if I see this signal, I'm thinking, all right, I'm waiting for the pullback because MA Rush is the sentiment. So MA Rush just went bullish. Okay, so don't hold your horses. Now we want to see the sentiment's up. Clearly, it's been for a while in trend radar. MA Rush is bullish. Now we want to think, well, where's a smart area to enter? So we look at liquidity IQ and volume IQ. Liquidity IQ, look at this. Resistance all the way up there. Wow, it's got another 100% to go. It might still fly up here a bit, but for me, it's a little too late to the party. I'd like to get an entry at a spot that I think is smart, which would, from volume IQ, be an area where there's lots of volume, or liquidity IQ, where there's a liquidity level. Maybe if we came down and filled that gap to get in here. What do you think, Daniel?
I think this gap fill is something we should be aware of because if we want to test this gap, price would need to come down all the way to this level there. So entering right now where things are so extended, I personally would find it very risky, especially for all these sellers also in that area, even though with low volume, but nonetheless.
That's what Paula said. Yeah. Yeah. And yeah, Paula just said, yeah, there's all sellers going all the way up there. Not a lot of volume, but remember, volume IQ has a look back. So if we came back here, it would be a little bit different. But yeah, we might see some selling. And shop, let me just answer this other question here from Paula. Is shop currently at a level where there's a lot of sellers? I wouldn't say so. There are sellers, but there's not a lot of data up here. So I wouldn't base too much on that.
Yeah.
Oklo,
Let's look at
last symbol.
Oklo's,
Yeah.
Oklo's interesting. Yeah.
Perhaps
So before we talk about the current situation, let's have a quick look of how beautiful this setup was in the past. So if you zoom in a little bit, trying to get this one out. Yeah, look what happened there. So we did break above the resistance level right there. Yeah, at this point. You can see price broke above this bluish line. We went up and then we came down. This is exactly what Nicholas said. This is our zone break retrace setup. If you combine this with market sentiment, meaning in this case, we are bullish. Emmy Rush for sure is bullish. The label will be all the way further back. And Trend Radar is showing us a healthy pullback. These are very powerful entries when price comes back to the broken level. Zone Big Retrace textbook. Now we are breaking once again above this resistance level, a new resistance level. Should we enter right now? I personally would be a bit careful. I like to enter on the first retrace after such a breakout. So we're breaking above now. I think price may go up for a little bit, but I don't think it's sustained. We may come down back to this broken level, and then I would personally enter on that retrace when Trend Radar is perhaps showing me a healthy pullback, like a little red patch. That's
Yeah,
my
and my last tip, we had a question if it works on other time frames, is oftentimes you'll see on a daily chart, like, look, it's kind of hard to read the volume up here. In fact, it's almost invisible. And that's on purpose in the indicator. You can make it brighter, but it's on purpose to make it kind of invisible to tell you this isn't that important.
yeah.
Okay. And what I like to do, if maybe a trend's going crazy or there's big important stuff and you don't see much here, is nothing stopping you from going to a 2-hour chart. 2 hours is still very significant on a swing trading time frame. Look, the start of June is just right there. It's not that many bars ago. And on this time frame, we can see clearer. Okay, there's a lot of volume and buyers at this level. Maybe if we retrace back to that, this is the same level we saw on the daily chart because the indicator's still set to show us levels from the daily. Maybe we can look there. Maybe we'll wait till we get down here, more volume, buyers. Then we can put a stop here where the sellers start to step in and there's not a lot of volume. So yeah, I just want to say that's a good tip. Zoom in a little bit.
And Nicholas, there's a question from Justin, which we can address while looking at this chart. He's asking, so let's say we see a liquidity capture event, maybe there's 0.1 out on the chart there, where we can see one. Yeah, this one here, which oftentimes always happens at an extreme, let's say near a resistance level or near support level. That's a precondition. And oftentimes it increases the odds that we're actually going to see a bounce off this level. But his question was, okay, I saw liquidity capture. The market did not bounce. Of course, there are no guarantees. Sometimes it doesn't. Should I get out of this trade or should I just wait it out? I personally would get out of this trade because at that point, the market thesis, my idea about what the next chapter will be all about is no longer valid. And I would close out this trade because I want to always trade consistently with my prediction.
Yeah. And Daniel, something, and also a great answer. And one thing I like to say about that, because that happens all the time, Justin, right? And one really important thing is it's just logical to get out for a very clear reason, which is whether your stop's invalidated or not. What does a liquidity capture mean? It means that price came up to a level and there's a lot of volume. Now, if price comes up to a level and there's liquidity capture, then it starts to come down. That means a lot of people sold, right? Then you short. Also, it's important to keep in mind the market sentiment. Like liquidity captures in a bullish trend, you're not always wanting to be shorting. But if we come up to a level, there's a liquidity capture, then it keeps moving up. What does that tell you? It tells you all the big orders at the resistance got bought up, right? There weren't enough sellers. Demand is exceeding supply. So if there's a liquidity capture and price starts to go up more, that's actually very bullish. So it depends on the market sentiment. That's like step one. Then it's what's happening with the liquidity captures and how to interpret them.
Yeah, absolutely. All right, Nicholas, thank you so much for this analysis. I'm going to grab the screen back. If we can find it. There we go. Okay, perfect. All right. So a couple of questions about this offer. Yes, it's for life. I mean, you can keep the indicator for life, but it will not last forever. It will be available for a couple of days, then the 30% discount will go away. So you don't have to, you're not super much in the rush, but you should also not wait too long to take advantage of this 30% discount that we are offering for these indicators. And if you're wondering for which platforms these indicators are available, simply, go to this page, tradingindicators.com/story. Click on an indicator that you're interested in, see all the details about this indicator, which will also include the platforms for which this indicator is available. All right. Okay, so with this, let me just see if there are any last minute questions. Paul says, thank you for teaching us how to read volume IQ better. Yes, of course, you're welcome. All right. And yeah, Paula, you are absolutely right. Trading is not. Good traders don't have an ego, meaning they are not stubbornly waiting until they actually get right. They admit, okay, my prediction, even though I use the best indicators I could possibly do with my the clearest mind I could use. It didn't work out. The market did not do what I expected. It happens. It happens to everyone. No, don't have an ego. Get out of this trade. Admit you are wrong. It's completely normal. And then try another time. So that's absolutely, you're right, Paula. Traders with an ego typically are not that successful. All right, guys, with this, I wish you all a great evening. And first of all, I should say thank you so much for joining us tonight. I hope we made it worth your while. And if there was a question which we did not answer today, or perhaps we overlooked them, you can always reach out to us via our homepage, tradingindicators.com. Click on support in the main menu, then on contact, put your question into the contact form. It will come straight to my inbox, and we will answer all these questions personally as soon as we can. Sometimes it takes a couple of hours, but we're going to get to all these questions. So with this, I wish you all a great evening or a great morning for the ones joining us from Australia. I believe it's morning there. And hopefully see you soon at our next webinar. Next up is our power scanning session this Saturday. With this, guys, have a great time. Trade safe. Watch out for your money and talk to you soon. Bye-bye.